and we are actually taking some of the measures. The economy is opening up today onwards. There are many inputs coming in from various corporates, Maruti, M&M, and many smaller ones as well, which are taking baby steps to come back to normalcy as India revival mission comes, moves forward. But there's another big deal which was announced this morning with Reliance Industries, and that is a large private equity company have picked up stake of worth almost 5,600 crore in Jio platforms. This is over and above the deal which they struck with Facebook. Nitin Soni is joining us to help us understand this transaction and the nature of the transaction essentially. Nitin, thank you so much for your time. How do you see private equity companies such as Silver Lake, their kind of pedigree, picking stake in Jio platform? How do you see Jio platform overall as an asset?
Thanks, Ajay, for having me on the show. So I think, first of all, on the balance sheet of Reliance, this deal with Silver Lake with the $750 million investment and Facebook deal of $5.7 billion, along with the rights issue, these three transactions are going to strengthen the balance sheet for Reliance. And we rate Reliance local currency idea rating at BBB flat with a positive outlook. And we have said that if the net adjusted debt to EBITDA, the leverage of the company improves to below 1.5x, then we may upgrade the ratings. On the Jio platform, I think it's a platform which is going to become quite an essential platform for an average Indian consumer. They have combined millions of kirana shops in the platform. WhatsApp, which also will have an agreement with the Jio platform, has about 400 million users already in India, and we're 390 million users at Reliance. I think what seems to us is that they have a plan to make it Jio platform combined with WhatsApp as a super app. You would have seen that in many countries, like in China, the users are much more comfortable and more attracted towards a super app like Tencent's WeChat, where they can do transactions, they can do transfer of money, pay their bills, and also, on a real-time basis, they can chat with friends and also the vendors which are supplying the goods and services. So I think we'll have to see how fully they integrate these two platforms, Jio platforms and WhatsApp and other related features. But I think going forward, the plan is to, create a platform which will enable users to do all the digital transactions. And at the same time, the digitalization of India is happening quite rapidly right now amid coronavirus, because we have been seeing that what digital transaction or digitalization, which we were expecting it to happen over a couple of years, is now happening in a matter of months. So amid COVID-19, I think this is a good transaction. And I think Reliance would need more money to invest in this business. If you compare India with China, India is behind in terms of digital adoption, in terms of penetration, and in terms of fiber availability. And China has already started 5G usage as well. So we have a long way to go, and all these transactions are going to provide cash to Reliance to invest in this business.
Right. Just one more question, Nitin. After the results in the call, I'm sure you would also be listening. The CFO, the joint CFO, Srikanth, indicated that the net debt-free target perhaps could be met in this calendar itself, which means in remaining months of 2020, whereas Mr. Mukesh Ambani has put in a target of becoming net debt-free by March. Do you see, in light of assuming that they are moving in the target, in the direction, and if these deals are any guidance, some more deals happen, do you see them moving to it aggressively? What are your thoughts on that commentary and the way deals are coming? And do you see that target being achieved in time?
See, these are large deals, and it really looks that the company is committed to achieve the target of strengthening its balance sheet and having a net cash position by March 2021. But given the pace of deals which are happening and Reliance is doing these deals, there could be a possibility that that target could be achieved sooner. But I think it also depends on the regulatory approvals on these deals. So, we will have to see how fast the regulator will provide the approvals for these transactions. And if regulatory approvals are given ahead of the time, yes, there could be a possibility that they can strengthen the balance sheet faster. But I think that from our point of view, what we have been saying is that these deals have been in line what the management have been saying, and if they achieve the net adjusted debt to over EBITDA to below 1.5x on a sustained basis, then we may upgrade the local currency IDR of triple B flat, which is on a positive outlook right now.
Right. All right, Nitin, we'll let you go on that one. Thanks so much for your time. That was Nitin Soni of Fitch Ratings, helping us understand the transaction and what possibilities lie ahead in their overall target of moving towards the status of being a net debt-free company at that size.